Good morning, Ron here. This morning, questions came in from Tasmania, from Kuwait, and we're going to take a look at the issues that were addressed in those questions, and we're going to take a look at the idea of developing a checklist for tops and bottoms and doing trading in general, and what kind of things might be on that checklist. Okay. Years ago, I used to have a checklist that I handed out when I did the live seminars. And these were, of course, for the Andrews course. Here's andrewscourse.com. Here's the main page. And I used to hand those out, and I found that they kind of drove me crazy. So, being one that doesn't want to drive you crazy, we're going to see if we can develop this in a bit saner manner. Okay, something that keeps you calm and nice and all that other stuff. First of all, let's take a look at daily versus intraday trading. As you may recall, in my last intraday video, I mentioned that, and this is real live stuff here. I mentioned that I was short in the demo account, short the bonds from 145.04, and then I'd probably stick with it. Well, here I am. And then I also mentioned that I might get in and out or stay in or whatever in the ES, and I wound up getting out, and I wound up getting back in, and here we are. Okay, and this number here, 250, of course, is inaccurate, because if you're short from 145.04 and the price is presently 142, it's a whole lot more than 250 bucks. And one of the first things we need to address is risk, as always. And let me just put it very, very simply when it comes to risk. These two positions, as small as they may be, put me at risk for in excess of $200,000 theoretically. Okay, and so you need to know what kind of risk you're going in for, and you need to know what the chances are of something happening that could impact that. And from my personal point of view, what could impact this tremendously is if Iran does something stupid, if Obama has a gas attack, any one of an unusual events, okay, or if North Korea does something stupid. But for the most part, based on my experience in the markets, the 30 or 40% moves in huge markets like the bonds or the ES aren't really occurrences that you see in one day. Okay, so okay, having said that, let's move on to why we have these positions and what kind of a checklist might be there. Well, first of all, in the ZB, let's take a look at that. Was there a checklist used? Yes, there kind of was. Let me show you. We actually did kind of use a checklist. Notice up here I have these little things, and anybody who's taken the Advanced Andrews course from me pretty much knows what they mean. You know what this is, you know what this is, this is. And so, and in addition, over here you have a shakeout, and so you know that there's a whole number of things that come in here, and you can, when you have an overwhelming number of these things here, you can use that in order to justify a trade. But I don't. I typically just look for a couple things, but even though I just look for a couple things, I like to note what all the different things are that I see up here. Okay, so in the bonds, for example, in the Treasury bonds, which is what these are, I'm looking at prices eventually going down here and hitting this target down here. Okay, and this has been my target for quite some time. As you may recall in the other video, I got short somewhere up here, and so my risk right now is a close. No, it's not a close outside here. There, as you know, those of you that have taken the course, there is, when you're in a third wave, it's customary to use a certain indicator that we teach you in the advanced course for your stops, and and it typically works better than the MLH, and I'll show you an example of that in a moment. As you know, we're also long the ES in the demo account, and let's get rid of some of these lines here. So see, if you look at the ES, you could see that this is some kind of a third wave situation here. 0, 1, 2, 3. Okay. Even if you go 0, 1, 2, once again a third wave. And let me show you what happens in a third wave. This is a great way to lose money. In a third wave, put your stops outside the H. Boom. See how easy it is to lose money? Not a wonderful idea. Okay. So once again, same thing. Putting your stops outside the H is absolutely deadly. And as you can see, prices are climbing this incredible wall of worry here. So with my target being up here somewhere, where is my target? I don't know. Well, it's not on this chart. Okay. So my target's up here somewhere in the clouds. And that's a much longer term target. Since my target is up here from my daily and weekly, the trend is up. So one of the things, if you're going to put it on a checklist, say when you're in a third wave, use the stop as indicated in the course manual. Okay, and that's very straightforward. So not the MLH. That's just really risky, as you can see. Okay, so so there's that. Let's take a look at what happened intraday. Okay, this was intraday, and last time I did a video, the market was here, and around here somewhere, and I wound up getting long, and it went up, and I got out, and next day it went down some more, and you know, like I said, I've been looking for this guy to go up, and so I wound up getting long a few times in here, and I didn't go short. And the reason I didn't go short was because even though there's some incredible money to be made on the short side here, and it's much quicker than the money on the long side in many situations, the risk is too high. See, if my probability indicator suggests that the market is going to go up, even if I screw up and get short at the worst possible point, like here or here, if I sit with it and endure this significant downdraw here, eventually probability is it'll come out unless it hits my stops. Okay, that's my personal logic in doing this. Now, where did I wind up getting in? Well, according to this, I got in yesterday at about 1274. So let's take a look. 1274. What do we have here? Okay, 1274 would have been, let's see, somewhere around here. Okay, so if I got in somewhere around here, you can easily take a look at the course methods and see what, just take a look having this with this much data. So you just move this kind of like this and say, okay, what 3 or 4 things were true at this point here? So for example, straight out of the manual, what happens at right near the end of a correction? And the belief is this is a correction. Okay, and you had it occur here. And then what typically sends the market going once the counter move is over, and this is just a beautiful example. Beautiful. You can see it right here. Okay, so you had that, and so you had the market marching up here, marching up. And once again, the important part is that you are not using the MLH for a stop in the third wave, as that is a pretty much guaranteed way to lose money. Okay, you see what I mean? It's one heck of a climb, and that's why, you know, this is your new channel that it's in effectively, and it may take quite some time to get up here. Okay, according to what I'm looking at. So this is what I see in the markets here right now. Now, so the question comes back to, what do you use for some kind of checklist and rules and targets and stuff like that? Oh, this is what Mark, our expert diver from Kuwait, sent us, and his checklist is watching charts that he thinks that they're going to go up to this target area up here, and that could very well be, that they'll actually go into these areas here. What exactly he'll do in this areas here, I have no idea, but that's his choice, and he likes to see lots of lines. And let's see, so what would I suggest to somebody who's new if they want to develop a checklist of some kind? Well, one of the things that you'd want to do is take a look. There's a video towards the end of the videos that you see, of the 20 some odd videos that I give you in the Advanced Andrews course, that there's one video where we talk about 15 things. Okay, these are those 15 things you can put on a checklist. They don't really occur a lot, but those are 15 things you can put on a checklist, and then you can add one or two more. You know, what typically occurs at the end of the correction, I don't know if that's in the 15 things. You can add, anyway, there's a whole number of things in there. I think the 15 is probably plenty. That'll get you up and going. Let's take a look at what we also have going on in the wonderful world of stocks. Okay, one of the things that I'm doing is I'm looking at stocks that are very likely to make it to the far parallel. Now, those of you that have the expanded course have a special video that says, well, once prices get past this median line here in a certain way, then there's a 10% chance they'll make it to the far parallel. I want to know at the beginning here, in this area here, which ones are likely to make it to the far parallel. Okay, and so what I've done is I've developed a system, and I'll tell you how I developed it based on that. And so now what you can do though is if you're in the expanded course, we gave you that special video, and so after prices come past here, you're looking for you're looking for prices to either make it to the far parallel or one of the other two things to be true, two or three things to be true, and because they only make it to the far parallel in 10% of the cases. Okay, and me, you know, doing something like this here really goes against all odds in theory. But here's how I developed this. What happened is that Andrews, as many of you know, in the early 70s would send out a newsletter by mail, by good old snail mail. He'd send it out Thursday and Friday, and he would give you a script by which you could read to your broker on Monday. This was amazing. You read the script to your broker, and he showed how over a period of several months he increased this commodity futures account by from like 5,000 to 50,000. So yeah, I took a look at this saying, okay, well, how did he cheat? What was his method to his madness and stuff like that? And what I found was there really was a method to the madness, and it really wasn't cheating. He didn't take an arbitrary futures contract and say, okay, we're going to do this one here, you know, just we're going to do soybeans only or bonds only. What he did was he looked at the different futures contracts, and when he had a certain pattern, and only when he had a certain pattern, would he trade that in order to do his 5,000 to 50,000 ride. Why? Well, because it was easier. You see, if you find a pattern, like let's say you find this one here. Okay, so let's say at this point here you have certain information. Okay, and if you remember on the bonds here, I wound up posting it on this right as we were right here saying, oh my gosh, we've got this thing, and down we go. There was several things that came in here, and when these things together give an indication, then there's a pretty good probability it's going to go down. But what we know is that on the way down, it also goes up. So on the way down to a target, which in this case, down here somewhere, it keeps on going up. And the benefit of that is that what Andrews would do is that if he saw that the counter move would be significant enough, he would then take off his position and get back in short when it came back over here. Okay, so he might, let's say for here, he might have gotten out, and once they go back up here where I got short, he'd get back in again on the short side and stay with the trend. And he would not risk his capital by going against the trend. This is what exactly he did in the turn water into wine, the 5,000 to 50,000. So anyway, so there's that. Anyway, if you're developing, back on the topic of developing the checklist, what you want to look at is that video about the 15, and also look at what exactly you use for a stop in the different situations. So for example, in a third wave, you do not use the standard MLH, you use something else. At the end of a correction, you look for certain things, which I think is in the 15. It's just these are all things that are available in the Advanced Andrews course. If you've taken the expanded course, then you may want to look at saying, gee, if prices go past this ML, they have a 10% chance of making it to the far H. What signals do we have that, besides exiting at the far H, because it's only 10%, what happens along here? And there's a video that shows you the 2 or 3 things to look at. So you can put that on your checklist, but it's really more of an if-then checklist. Understand? Okay, so it's only if it goes past here that you then look for those other things. Okay. Let's take a look at stocks. Stocks. Here's stocks, for example. I sent these out, and these are simply stocks where I'm looking at. These are going to be the 10 percenters, and so basis my indications, they've got a really good shot at being the 10 percenters. Here's another one. Looks like to us it's going to be a 10 percenter. Okay, and this one's moving nicely. Okay, so and going for 10 percenters isn't necessarily a wise move unless you have something that's really a whiz-bang indicator. Okay, but the advantage in this situation here, when I'm going for the 10 percenters, is my stop is a close outside the MLH. Okay, so my stop is here. Notice this is not a third wave. Yeah, once again, my stops, prices closed down here past the H. Then I'm using that. Okay, here's this one. So here's my stops down here somewhere. Okay, so this is to give you some idea that if I have I do have a checklist in my head, so to speak, but many of these things on the checklist are if-then. So if I have a certain type of an entry signal, I'm looking at this here being my stop, versus if and if I'm in a third wave, I'm looking at something else being my stop. It just depends on what the situation is, right? So hope this has given you some insight as to what I do and how I do it, so that perhaps you can find ways that work better for you. And we invite you to come over to andrewscourse.com, click on new, and on new you can join our email group. That's free. Okay, a Precision Trader email group. And if you really want to get moving, you can get a free copy of the software as our gift to you. You can get over 20 videos that are seen only by course members. And then you have private membership in a private email group where you get to ask me questions that I sometimes address in videos. and otherwise addressed right there on the web. And and then we always have a special get-together, live get-together that we hold once a year. And next year, it we haven't announced, or actually in 2012, haven't announced exactly where it would be, but it looks like it'll be in the summer or the fall. All right, so we'll let you know on that. Anyway, come join us at andrewscourse.com, and I'll tell you a little trick. If you if you go to andrewscourse.com and then click on, let's say you click on charts and forecasts, okay, and then you click on home, then surprise, you'll see a whole bunch of different stuff. You'll see an article, okay. So let's say you click on here, reviews and articles, okay, and then you click on home, and then you'll see a different article. This is really weird stuff, huh? And click on home, you'll see a different article. So we've done some of this little tricky stuff, and give you an opportunity to kind of discover a few articles here and there. And anyway, come and join us, and see you next time. Bye.